Hello folks, Yoder here. Well, I wasn't planning on making a video today, but a pattern is shown here on the 5-minute chart of the S&P E-mini, which is so classic and so perfect that I really have to throw up my recorder here and see what comes of it. We have here the ultimate bear flag. First of all, we have a market in a downtrend with lower highs and lower lows in a sustained manner. Then we have a channel-bound reaction to resistance in the form of the 20-period moving average, and we're seeing the market show some signs of resistance. So now, two ways to play a flag, the classic way and my way. Classic way will work. It doesn't have nearly the edge. So let's go and look at the classic way first of all. A channel-bound correction defines a flag. There's our channel. Classic way to trade this would be to go short on a break of the lower trend line, looking at probably 84, 84.25 there, with a stop above the highs. So 86, 86.25, about a 2-point stop. However, I can skew the risk to reward ratio dramatically in my favor by being aggressive, essentially betting at this point in time that resistance will not be broken. So the market's currently trading 825.50, 825.25. I'm going to go ahead and pause here real quick and get some orders set up. Okay, got filled right up against resistance. Now, the reason why I love to be aggressive on support or resistance plays is very simple. Number one, if you are taking entries right at resistance or support, you are going to be essentially top tick if indeed your prediction that support or resistance area will be significant is correct. Very nice to be top tick. It certainly feeds the ego as well as really exploding your risk to reward ratio. So the problem with that, the downside, is that sometimes you'll be wrong and the market will just blast up through resistance, in which case you'll take your stop. Or, as in the case here, we're going to probably spend 15 minutes weaseling sideways and experiencing heartburn as we wait for follow-through. Well, actually, maybe not. Here we are coming down to the lower part of the trend line. Let's go ahead and kind of zoom in here, see if we can really watch as that breaks and as that traditional entry is seen. Okay, so here we go now. We're at 824. If we go one tick lower, then pretty much anybody who's drawn a trend line is going to start to go short as a result of the bear flag, and you can start to see those orders kicking in here. I would expect to see a little bit of a pop in the overall volume as well to help confirm that the selling is the result of more orders flowing in. And if that's the case, then I think we're pretty much off to the races. And here we go. See a little bit of acceleration. Now, once again, there's nothing wrong with trading it in a traditional manner. The folks who all went short around 824 are up almost a point at this juncture. But look at me. I am up a point, well, almost 2 because of the aggressive entry. Also, my stop's a lot smaller than theirs. They had to take about a 2-point stop, whereas I'm able to get away in this particular instance with a stop around 1 to 1.5 points. Again, classic bear flag in the 5-minute ES. This is something you're going to see a lot of, and there are literally people who make their living trading nothing but this pattern. So it's definitely a perfect example of a real core long and short pattern that has great productivity. You'll see it a lot in any major market instrument. In this case, the futures. You probably see it at least, I'd say, 3 to 5 times a week, and that's more than enough to produce consistent profitability. Now, here comes the wiggle. This is always the difficult time for any traditional technical analysis pattern right now. You get the initial surge, which confirms that the trade has set up and that everyone is on board to the short side. Then the market tends to lift, whipsaw, wiggle back. Wouldn't be too surprised to see it come all the way back up to the moving average. The days of one test and then having the market trend are pretty much gone. It takes a lot more patience now to trade than ever before. So I'm going to go ahead and let this wiggle itself out. Take a quick pause here because once the wiggle started, it usually takes 5 or 10 minutes for trend continuation to occur. So I'll pause and come back after the market has picked its line of least resistance and either fails this trade or produces a retest of the lows. So about 4.5 minutes have passed, and you can see we're just coming back down here to the lows. Here comes the first decision point. Do you go ahead and take the profits right here into the lows, or do you let it go down, hopefully for some more significant trending to the downside? I'm going to go ahead and take that profit. So let me go ahead and pause here. I'm going to bid at 8.22 even. All right, so trade resolved. Now, the reason I'm able to bid here into the lows with such comfort and confidence is because of my risk-to-reward ratio. Look at this now. If we go back up to the original entry point, up at resistance at 550, exit at 2, gives us a 3.5-point profit for a 1.5-point risk. So positive risk-reward, a little more than 2 to 1 there. And the ability now to wait for the next flag. If the market breaks down to new lows, it's probably going to form another flag and perhaps will offer another opportunity later in the day. You can see the flag that formed here, in fact, as the market channeled upward, didn't actually test the moving average, so that didn't qualify for me as a valid setup. Missed that trade, but certainly the overwhelming risk to reward off of this trade more than makes up. And you'll see this again and again. People who take aggressive entries will often get twice as much, or at least 1.5 times more, out of the same trade as those employing a more traditional entry and exit strategy. So these are exactly the sorts of things that I'm teaching to my edge consulting clients. We're looking at in their trading programs. In fact, I had a gentleman working with over the last week, and we literally tripled his profitability. His average per share went up 3 times based on some changes to entry and exit to methodology. So these little tweaks within your overall trading system are very important, and hopefully this near real-time example in the ES in today's session will help to really lock that in for you. For more information about my edge consulting services and how they can help either an existing trading program make more money or help you get to profitability or back there if you're struggling in the current market environment, just shoot me an email, info@boyoder.com. So I'll ring off for now. Time for lunch. Banked a decent trade out of the morning. Really one shot, one kill type session so far. And we'll see what the afternoon can bring. As always, thanks for listening. My name is Bo Yoder. Good luck and good trading.